Well, welcome to Withholding Basics. As I mentioned, I'm Cindy Nellis, and I'm with the Penn West Clarion Small Business Development Center, and we are very happy that you are with us today. We know that there are lots of questions when it comes to taxes, and so today we're going to dive into this topic with our experts from the Department of Revenue. Whether you're ready to hire your first employee, maybe you already have employees, or you're looking to pay someone to perform services for your business, our webinar today will help you navigate those withholding basics from W-2 income to 1099s. We're going to cover withholding requirements from compensation, how to file, and year-end reporting. And finally, we'll touch on withholding for retirement income and Pennsylvania rules for different types of retirement withdrawals. The Pennsylvania Small Business Development Center, we've established a partnership with the Pennsylvania Department of Revenue. We're really excited about that. And in this partnership, we deliver monthly webinars that provide key information for business owners. We have 4 webinars, each one offered every 4 months. We start today with our last one in the series called Withholding Basics. But as you can see, we also have, and we'll get started with the top of the series next month, getting started with My Path, then Pennsylvania taxes for new businesses, and finally sales tax basics again. You'll be receiving a flyer, and certainly we hope that you plan to attend some of these upcoming webinars. Before we get started, though, I'd like to just give you a few reminders. If you have any questions for our experts from the Department of Revenue, we ask that you enter them into into the Q&A. We will be sharing a link for the recording of today's webinar, of course, our tax flyer series, and all the PowerPoint presentations. If you have a question for our presenters, as I mentioned, the Q&A, if you have a question for me, your host, please enter that in the chat box. A little bit about the Small Business Development Center. We are a statewide program that we are located with 15 centers, all located at institutions of higher education. So as you can see our map, and the colleges and universities who host us. We are a grant-funded program funded by our host institutions, as well as through the federal government, through the Small Business Administration, and through the state government, through the Department of Community and Economic Development. So who is the SBDC? What do we do? Well, we are here to help any small business. To us, a business is generally a business with less than 500 employees, but our mission here is to help you, our small business owners, start, grow, and succeed. And we do that through one-on-one business consulting services that are at no cost and confidential. We work with prospective individuals looking to start a business, as well as for-profit business owners. We also provide training. Today is an example of that training, but we have a large variety of different types of trainings that all of our 15 centers offer. And so we encourage you to check out pasbdc.org. That is the website that has all of the listings of the training events. We have quite a few that are virtual, so it doesn't matter where you are in Pennsylvania, those webinars could benefit you, although we are starting to get back in person. And ultimately, if you're a small business owner, we encourage you, we want you to connect with your small business development center that's located in your neighborhood. Not only do we have consulting and training services, but we have a lot of information, tools, and resources, research databases that we can use to help you answer those questions or find answers to questions that you have as you operate your business. And then at the end of today, we're going to encourage you to connect with the SBDC. We'll give you that link. All we ask is that you submit a request for consulting, and then your SBDC in your neighborhood will contact you and set up time to meet with you one-on-one. There's no wrong door, and so I give you my contact information. You can always email me, and I will get you connected with your SBDC. Okay, with that, I'd like to introduce you to our speaker, Sarah Swieger. Sarah began her career with the Pennsylvania Department of Revenue in 2015. She started in the Taxpayer Service and Information Center, handling customer service calls for personal income tax. property tax and rent rebate, employer withholding, and corporation taxes. In 2017, she was promoted to a realty transfer tax specialist working in the individual tax division, and then returned to the Taxpayer Service and Information Center as a supervisor in 2018. 2019, she moved into her current position as a research analyst in the Customer Outreach Relations and Engagement Division. So with that, Sarah, I will turn it over to you.
Great. Thank you so much, Cindy. Okay.
Looks great.
Cool. Hello and welcome, everyone. As Cindy said, my name is Sarah Swieger, and I'm a research analyst within our core division, our Customer Outreach Relations and Engagement Division within CEC. I want to start off by saying thank you for joining us today and learning more about personal income tax and withholding basics. This is a brand new module that we added to our entrepreneurship or our new business series to help business owners understand how to properly collect and remit withholding on behalf of their employees. So let's get started. Today, we're going to cover a wide range of information relating to withholding tax and the nuances that go into it. We're going to start with some fundamental information about personal income tax withholding, and then we'll move on to the different types of withholding accounts that we have here in PA. Once you have an understanding of what you need to do as a business owner, we're then going to talk about how to register for withholding accounts and to talk through the filing and payment requirements. After all of that, we're then going to be covering some things that you should know about record keeping. Most new business owners do not realize just how important it is to keep good books and records. But please understand that this is for your benefit. If you ever get audited, which by the way is a standard business practice, you would want to be able to show up to show what you have done and that it is necessary to remain in compliance with the state. I'm then going to wrap up today's module with reviewing some resources that are out there to help you find answers should you have any additional questions after today. So let's start with some fundamentals of withholding. So before we get started, let's define a few key terms that you're going to hear throughout this presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are all called trust fund taxes. The next term we have is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party that they work for. However, some hired workers are not legally classified as employees and they have a separate tax classification. And then our last term is non-employee. A non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. As a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments towards their withholding. So next we have withholding. Obviously, this entire presentation is about withholding, but what's important to note is that we are talking about the money that an employer deducts from an employee's gross compensation and pays directly to the government. Then we have compensation. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. Employer withholding is due on all types of taxable compensation, and it's not required on non-taxable compensation. A common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, any damages, whether by suit or otherwise, for personal injuries or sickness and payments made under Workers' Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. And last but not least, we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salaries and wages. Some are required by law, while others are optional. Employee benefit programs such as pensions, profit sharing, and stock bonus plans, and simplified employee plans, or commonly referred to as SEEP or SEP, are established by employers to provide additional compensation to participating employees upon or after separation from service, the completion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefit to employees or their beneficiaries, such as childcare facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, tuition reductions, disability benefits, or strike benefits, and dismissal pay. Non-cash benefits, which are reportable as compensation under the Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are therefore subject to withholding. Taxable benefits include, but are not limited to, payments made by the employer to help employees with adoption expenses, payments made by the employer to help employees with additional medical or dental expenses not covered by medical insurance unless allowable as an ordinary, reasonable, and necessary business expense. Medical expenses paid under a qualifying self-insured medical reimbursement account, such as a medical savings account, are not taxable. Life insurance payments made by the employer on the employee's dependents, amounts paid by the employer for non-job related educational assistance provided to employees or their dependents, amounts paid to employees in lieu of using vacation days, and payments by employers into pension plans, 401k plans, or other retirement plans made pursuant to the employee's election by salary reduction agreement or through periodic payroll deductions are taxable to employees and should be included in the Pennsylvania gross wages on their W-2 forms. In general, payments made by employers for employee welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Additionally, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. Generally, an employer provides a service or property when the company assumes the financial responsibility for the liability or payment. So, in other words, the expense is billed to the company and the company is responsible for the payments. Therefore, the personal use of an employer's property, leased or owned, or a service provided by the employer is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided, not reimbursed by the employer. So, for example, a company seeking to provide transportation as a non-taxable benefit for its employees could use a company van to transport them. The benefit becomes taxable when the company reimburses the employees for bus fare to commute or provides a transportation allowance. Federally excludable no additional cost services, qualified employee discounts, working condition fringe benefits, or 5 qualified transportation fringe benefits are not considered taxable so long as the employee does not have the choice between cash and the benefit or the employee does not reduce his or her salary in order to receive the benefit. So, as another example, a program under which an employee is furnished parking facilities, use of company grounds, picnic areas, or a workout facility at no reduction in that employee's salary, and where the employee is not reimbursed for that benefit, provides benefits not considered compensation, and therefore it is not subject to withholding. Withholding taxes do vary by different state and local tax jurisdictions. Most states operate like the federal government and they have tax brackets, meaning the percent of the tax is taken depends on the income level. However, here in Pennsylvania, we have a flat tax rate, which is 3.07%. This means regardless of how much you make, everyone is taxed at the same tax rate. The amount of tax withheld is a credit against the income taxes that the employee must pay during the year. For PA income tax withholding purposes, there are 3 different types of withholding that we're going to talk about. The most common one is employer withholding. Next is other income withholding. And then last but not least, we have our retirement withholding. The type of withholding account that you need is going to vary depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may be subject to withholding and retirement distributions as well. If you are a business owner hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing the service are employees or non-employees before you are able to decide what type of withholding accounts you're going to need. In determining whether the person providing service is an employee or non-employee, all information that provides evidence of the degree of control and independence must be considered. So let's look at some common law rules. These are facts that provide evidence of the degree of control and independence that fall into 3 separate categories. The first one is behavioral. Does the company control or have the right to control what the worker does and how the worker does their job? Financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, and who provides the tools or supplies. And third, we have type of relationship. Are there written contracts or employee type of benefits, i.e. pension plans, insurance, vacation pay, and so on? Will the relationship continue, and is the work performed a key aspect of the business? Businesses must weigh all of these factors when determining whether a worker is either an employee or a non-employee. Some factors may indicate that the worker is an employee, while other factors indicate that the worker is an independent contractor or non-employee. There is no magic or set number of factors that makes the worker an employee or independent contractor, and no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. The keys are to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, document each of these factors using in coming up with your determination. If it's still unclear whether a worker is going to be an employee or an independent contractor or non-employee after reviewing the 3 categories of evidence, then you can use Form SS-8, Determination of a Worker Status for Purposes of Federal Employment Taxes and Income Tax Withholding, which can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will then review the facts and circumstances and then give an official determination of the worker status. The thing to be aware of with that is it can take at least 6 months to get a determination. A business that continually hires the same type of worker to perform particular services will maybe want to consider filling out the Form SS-8. Additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a Form W-2 and file in duplicate with the PA Department of Revenue. If you hire non-employees, you will then need to issue a Form 1099-NEC. If you pay via miscellaneous sources of income, you will then need to issue Form 1099-MIS or 1099 miscellaneous. And in addition, your employee may receive a 1099-R if they took a distribution from a retirement plan, but that will likely be issued from the financial institution that is administering their retirement or pension plan. It's important to note that these forms need to be filled in duplicate with the IRS and the Department of Revenue, regardless of whether there is actual withholding, so long as you have paid more than $600. Once you have determined that you have employees, you will then need to withhold income tax from their compensation, thus requiring employer withholding accounts. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in two common cases. The first is when resident employees perform services within or outside of Pennsylvania. And the second situation is when non-resident employees perform services within PA. So in simpler terms, if you are a business that's located in Pennsylvania or conducting business in Pennsylvania, you should withhold personal income tax on all compensation paid to PA residents, but you are only required to withhold on PA sources of income for non-residents. So if the employee doing the work does not live in Pennsylvania, but the work is being performed in Pennsylvania, there is going to be a withholding requirement. Alternatively, if the employee does not live in PA and the work is not being performed in PA, then there will be no withholding requirement. Again, the PA personal income tax rate is a flat rate of 3.07%. So this means you must withhold 3.07% of the gross compensation that you are paying the employee. We do encourage you to deposit this into a separate bank account until you are ready to remit your payment to the department. There is one exception, which is if an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. These states are considered reciprocal states, meaning that employees only pay taxes in the state where they actually live. So even though it may be deemed PA sourced income because the work is actually being performed in Pennsylvania, we have agreed not to tax them based on their residency in one of these reciprocal states. In these cases, the business is not required to withhold Pennsylvania income tax on the PA sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must submit a REV-419 to you, the employer, to indicate that they live in a reciprocal state. You must keep the completed form in their payroll records for 4 years in case of a withholding audit. If a business mistakenly withholds PA income tax for a resident of a reciprocal state, the employee will need to file a Pennsylvania PA 40 as a non-resident to request a refund of that PA withholding. If you have determined that you are hiring independent contractors or non-employees to perform services, you may be required to open a other income withholding account. You will see on the slide that you are required to open an other income withholding account when you hire non-employees that do not reside in Pennsylvania to perform services worth over $5,000 for the year. Per IRS rules, the Form 1099-NEC non-employee compensation must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, PA rules state that non-resident withholding doesn't actually kick in until $5,000 of income is paid to an individual or business. What is unique about other income withholding is that it only applies to non-resident non-employees to whom you pay over $5,000 annually. This means if you hire a resident contractor or non-employee who lives in Pennsylvania, you do not have to have a withholding requirement. In these situations, you will still need to file the 1099-NEC to report the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on that income. Another reason why you may need to open an other income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amounts of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are going to be reported on a 1099 MISC or 1099 miscellaneous. A business is required to file Form 1099 NEC and withholding PA personal income tax if all of the following 4 conditions are met. 1, the non-employee does not live in Pennsylvania. 2, payment was made to an individual, estate, trust, or disregarded entity that is owned by an individual, estate, or trust. 3, a payment for service was made in the conduct of your trade or business. And lastly, payments equaled to more than $5,000 for the entire year. On the other hand, the withholding of PA personal income tax is going to be optional if 1, the payments did not total $5,000 for the year. 2, the non-employee lives in Pennsylvania. Withholding is not required on residents. 3, payment was made to a partnership, corporation, or multi-member LLC. Those entities have their own non-resident withholding requirements, but we're not going to get into it in this module. If the payment was for services not related to your business, would be the last reason. Please keep in mind that payments we are referring to here is anything that falls under the compensation class of income or business class of income. We also mentioned miscellaneous income. Examples of miscellaneous income include royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments to an attorney, and any fishing boat proceeds. For PA purposes, you are required to withhold PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 MISC if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in Pennsylvania, the business should withhold personal income tax at the rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. If you are renting from something like a property management partnership, you don't have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. Please be sure to follow IRS rules for issuing the 1099 miscellaneous. And finally, the last withholding account is the retirement withholding. As a small business, you will likely not open a retirement withholding account as you will probably not be the administrator of the actual retirement plan for your employees. However, for general information, the Form 1099-R must be filed for each person who made a designated distribution in excess of $10 or more from profit sharing or retirement plans, any individual retirement plan arrangements such as IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, and charitable gift annuities, and so on. So hopefully you know now what kind of withholding accounts that you may need. So next I want to go over how to actually register for these accounts. Excuse me. Registering for business tax accounts is going to vary slightly depending on whether you are an existing entity in PA or if you are a brand new entity. Brand new entities who do not have any existing tax accounts with the PA Department of Revenue are going to complete the PA online business registration from the MyPath homepage. To get started, you're going to type in mypath.pa.gov and scroll down to the panel that's titled Registration. From there, you will click on the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is an intuitive one, so depending on how you answer these questions is going to determine what questions you are presented with going throughout the application. Once that's complete, you will immediately receive a confirmation number, which you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. If you need help setting up your MyPath profile, we do have a series of instructional videos called our Revenue 411 videos. Those are available on the Department of Revenue website, revenue.pa.gov, and that will walk you through the steps on how to create a primary user profile. If you are an existing entity, say you have a sales tax account and now you just want to add employer withholding, then you would need to create your MyPath profile, or if you already have one set up, you simply just need to log into your profile, click on the More tab at the top of the screen, and from there you'll see a hyperlink that says Register New Business Tax Accounts. This is going to be really similar to the one on the home page, but some of the information is going to be pre-populated for you since you already have existing tax accounts. Please keep in mind that most of the time sole proprietors will have what we call existing accounts because their personal income taxes are linked to their social security number. So if you're attempting to register from the homepage and you are getting an error message, that most likely is going to be the problem. Registering online establishes business tax accounts with the Pennsylvania Department of Revenue and as well as opens unemployment compensation accounts administered by the Department of Labor and Industry. Although all filing and payments for unemployment compensation is going to have to be done through the Department of Labor and Industry. We're calling this out specifically because you're applying for that account through our application, but we are not actually the keepers of that account once it's opened. So if you have unemployment compensation, everything will be done through Department of Labor and Industry. So once you are completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner is required to deduct and withhold tax must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3 months. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this. One is online, or you can use a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your withholding tax amounts. Not only are you able to file and pay for the current year, but you're also able to view previously filed returns, access notices that have been issued from both PATH and our old eTide system. You can also request statements of accounts that are available immediately, as well as send a message to the department and more. Another very important feature is that you can grant permission to others like your bookkeeper to also view information regarding your returns. You are able to access the MyPath portal at mypath.pa.gov or simply visit revenue.pa.gov, and we have an icon on the home screen that says MyPath. So if you click on that, it will take you right to the MyPath homepage. Again, please note that you must create a user profile to utilize this service. If you do need assistance with creating your user profile, again, we have our 411 videos that are available on creating the user profile. When it comes to filing, we also have a Revenue 411 video that is specifically for filing a quarterly W-3 for your withholding. And lastly, the department does have approved third-party software vendors who will provide e-filing software for customers who do not wish to use the MyPath portal. We have a complete list of approved software vendors that is available on the department's website, which once again is revenue.pa.gov. So whereas the filing frequency for withholding taxes is always going to be quarterly, the payment frequency may vary depending on the amount of withholding that you are collecting each quarter. So when you first register for a withholding account, your payment frequency is automatically going to be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current first and second quarter withholding payments, as well as the prior year's third and fourth quarter withholding payments to determine if your filing frequency needs to be adjusted. So if your total withholding is under $300 per quarter, you would have a quarterly payment filing frequency. In this case, the taxes are due the last day of April, July, October, and January. If your total withholding is $300 to $999 per quarter, you would have a monthly payment frequency. For these employers, the taxes are due the 15th day of the following month. If your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. And lastly, if your total withholding is $5,000 or greater per quarter, or $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes would be due on the Wednesday following the pay dates for employers whose pay dates fall on a Wednesday, Thursday, or Friday, and on the Friday following the pay dates for employers whose pay days fall on Saturday, Sunday, Monday, or Tuesday. Customers are able to request a payment frequency change if they so desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or by using the send a message feature to submit a written request. An employer may change to a less frequent payment schedule only at the beginning of the calendar year, so long as the amount required to be deducted and withheld for each quarter is reasonably expected to be less than the criteria amount for the current payment schedule. Similar to filing the returns, employers can remit their withholding payments one of 2 ways. Once again, we strongly recommend that you utilize our MyPath portal, which again, mypath.pa.gov, or you again have the option of using a third-party vendor. Some important things to remember is payment vouchers are only available via MyPath, and the use of other tax forms could result in non-filer notifications and or the misapplication of a tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must make that payment electronically through an electronic funds transfer, which is also commonly referred to as an EFT. Failure to comply with the electronic funds transfer remittance requirements can result in an assessment of penalty that is equal to 3% of the total tax due, but will not exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So essentially, if every quarter you're sending in a check for over $1,000, you're going to get that EFT penalty every single quarter. If you need assistance remitting your payment through our MyPath portal, once again, we have a 411 video for that as well, called Making Period Deposit Payments. So in addition to remitting quarterly returns and payments, employers must also file an end of the year return, which is the annual reconciliation return, the REV 1667. This annual reconciliation not only reconciles all 4 quarterly returns that were remitted, but also reconciles any W-2s or 1099s reported by the employer. If you need help, once again, we have a 411 video for that too, called Filing a Revenue 1667. And we can't stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the 1667, which is going to flag the account for noncompliance. The same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time, so the PA Department of Revenue may administer tax laws effectively. The general rule is that you should keep your records, quote, as long as necessary. Many tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax and the amount of time that you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessment is 3 years and begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is going to be based on the date that the tax is paid. To comply with regulatory requirements, an employer must maintain records for each and every payroll period, an employee of how much, if any, of that tax was deducted or collected during the payroll period, or collected in addition to the tax required to be deducted and withheld during the payroll period for that payroll period. The records must provide a breakdown for each of the following: amounts withheld greater than the required 3.07% pursuant to a written agreement under 61 PA Code 113.3b. Amounts that are deducted pursuant to 61 PA Code 113.72 for under collection in another withholding period, or amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so just make sure that you consult the requirements. In addition, your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate, and that you remitted the withholdings to Pennsylvania. To show these things, you must have documentation showing amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to employees, dates and amounts of the tax that you withheld from their pay, dates and amounts of your withholding tax deposits, which we advise that you do separate deposits for these transactions so that they are easily reconciled with your books. And last but not least, copies of withholding tax returns that you filed and all confirmation numbers. A standard payroll journal and accrual account can be used to record this information. This will also help serve as the basis for completing W-2 wage record reports. As I said earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is only going to be taxable to their resident state. So again, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete the REV 419 and retain it for your records. Again, as a reminder, if you, the employer, accept the REV-419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold the PA tax. 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC or miscellaneous form showing a recipient number, last name, rents, royalties, other income, medical health care payments, gross proceeds paid to an attorney, non-employee compensation in box 1, state tax withheld, state income, schedule type, and if any corrections were made. So I stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding return, or your W-3. Your record should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns, as they will help you in filing your REV 1667, the annual reconciliation. So it's important to know that periodically the Department of Revenue conducts desk reviews or audits in which they review the records of thousands of businesses for tax compliance. This is going to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that the tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other informational resources. This other information is going to include other tax returns and government or industry data applicable to the business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it's extremely important to ensure that you are keeping complete and accurate records at all times. So withholding tax is a very important tax for business owners to deal with, and it's considered a trust fund tax, meaning that the employees are trusting the business to withhold and remit on their behalf. The Commonwealth is trusting you to make those remittances timely to the Department of Revenue. So let's go over some resources that are going to be available to you should you have any additional questions or concerns after today's module. First is the REV-415, which is our Employer Withholding Information Guide. This guide contains all of the information that I went over with you here today. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds. There's also guidance for payroll providers, as well as phone numbers for areas to contact depending on what your question or your need is. This is available on the department website at www.revenue.pa.gov. So you can either find it by searching under forms and information, forms for businesses, employer withholding forms, or in my opinion, the easiest way to do it is just to type in REV-415 into the search bar on the homepage, and it will provide you with a direct link. Next, we have the REV-580, which is our FAQ sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submissions, some phone numbers, and the website for the online customer service center, which I will go over shortly. And here we have the REV-588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a really great resource that touches on all the basics for new business owners. This guide also includes information for sales tax, as well as registration, employer withholding tax, and other items that are going to go into owning and operating a compliant PA business. And we have the REV-1716, which is the schedule that we put out every year that breaks down the filing and payment due dates by filing frequency. So the portion of the presentation today where I threw a bunch of dates at you for when you would need to file your payments is very overwhelming. So this schedule is super handy because it's all laid out for you, so you don't have to kind of calculate it on your own. The 2023 schedule is published and available under Forms for Businesses, Employer Withholding, or like I said before, if you just want to type that form number REV-1716 into the search bar on the revenue homepage, that will provide you again with a direct link for this calendar. In addition to payment due dates, this calendar also breaks down return filing due dates as well. So it's an all-in-one reminder. We have the REV-1611, which is the form that is going to be used to calculate interest on all taxes due after January 1st of 1982. It's calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. So currently the rate is 7% annually, or 0.000192% per day. We do strongly encourage all of our customers to use our online customer service center, which I just mentioned a little bit ago. So to do this, you can visit the URL that's listed on the screen, or click the customer service icon that is displayed on the slide, which is right on the revenue homepage as well. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information that you are receiving is both accurate and relevant. If you're not able to find an answer to your question through the FAQs themselves or any of our other general website resources, you do have the option to submit a question to the department. Essentially, this is like using an email. You would have to create an account. You can ask anything that is a general taxability question, or if you have a question that is more specific regarding your account, you can submit it that way. We do generally respond or review it within 72 business hours. Your question would be routed to an agent that is specialized in that category. They will take a look at your question, then respond to you. And last but not least, we have our customer experience call center. Here you're going to be able to speak to a representative that is skilled in whichever particular tax type that you pick from the menu prompt. Our regular business hours are Monday through Friday from 8 a.m. to 5 p.m. We do also have a schedule a call feature if you don't exactly have the time to sit on hold waiting for a person. This feature, we have the availability for it on our homepage as well. It's a phone icon, schedule a call. Once you do that, you'll just need to enter in your information like your name, a good callback number. As a disclaimer, we cannot call back any phone numbers that require an extension. So you want to make sure that it's a line that is directly to you. You will pick the date and time, whatever is available, and then the tax type that you are calling about. And an agent who is skilled in that area will return the phone call around the time that you selected. Another thing that we like to give a disclaimer about with a schedule a call is that depending on call volumes, your call might be a few minutes late. So if you pick a call to come to you at 2 o'clock, you might not get it till 2:05. It's just because we might have a lot of calls at that time. So we do ask for patience with that. If you have any questions that is specific to MyPath, for those of you using the portal for filing or remitting, please see the MyPath information page. We have created a vanity URL for revenue.pa.gov/MyPath information to make this information easy to find. And last but not least, I brought up these videos about 400 times today, so I hope they're easy to remember. These are instructional videos, the Revenue 411s. As I mentioned throughout this presentation, a lot of these videos are very function specific. So if you want something just for creating a profile, we have one for that. We have one that is just for filing, withholding, or just for viewing and printing letters. So there is a ton available out there that will walk you through the steps and how to complete a transaction within MyPath. And that is all I have today for withholding. So if there are any additional questions, we can go ahead and open up the floor for that.
Thanks, Sarah. That was fabulous. While all of you are thinking about your questions, I would like to quickly launch a poll, just a short one question poll. And in addition, again, I want to thank our experts with the Department of Revenue. They've been on hand to answer your questions, and I know we've had a few submitted, and if you have any more, feel free to go ahead and enter them into the Q&A. Following today's webinar, you will be receiving a survey from the Small Business Development Center, and I just ask that you take a few minutes to complete it. It's not very long, gives us critical information about your feedback about today, as well as what kind of format you like training for us planning moving forward, as well as when you like training. So if you could look for that email, I'll be launching it as soon as we finish today. As a reminder, you'll be getting the PowerPoint presentations, and you'll be getting a recording to today's webinar and any other resources, information about how you connect with the Small Business Development Center. So with that, Sarah, thank you. I don't have anything else, and it doesn't look like we have any additional questions. So I'm going to go ahead and finish our recording. And